Hi, this is Dan Collins, Editor-in-Chief of Futures Magazine, coming to you from the floor of the Chicago Board of Trade on February 20th, 2014. This morning I want to talk to you about the Federal Reserve minutes from the January meeting because it caused quite a stir. The minutes came out and we learned that they discussed tightening quite a bit, which was a surprise because the rest of the world in the last 3 weeks, as bonds were rising, were questioning whether they'd have to slow down the pace of tapering because of the back-to-back bad unemployment reports. Yesterday morning, also housing starts came out much worse than expected, and there's a growing belief that maybe the economy is slowing in the first quarter, and maybe they're not going to be able to keep up that 10 billion per meeting tapering. So it kind of took the markets by surprise, and they sold off when they saw that they were actually talking about tightening. I'd kind of walk you down a little bit from that, and if you go to futuresmag.com, and then you can see our blog, I wrote something about that last night. First off, it's a minutes from the Feb 28th to 29th meeting, so at the time there was no January unemployment numbers. Basically, there was the December poor numbers, and I think after taking so long for them to decide to initiate the taper, they weren't going to let one bad data point, change things. But now there's two bad data points, and so they're probably going to rethink it so that those minutes are a little old in terms of information. And the other question is the unemployment rate has come down to 6.6%, near the 6.5 target that they had, that Fed Chairman Ben Bernanke had indicated would be perhaps a threshold for starting to raise interest rates. Problem is that we haven't seen tremendous growth in non-farm payrolls. That unemployment rate has come down more on people falling off the job rolls, though there is a question that how many people are retiring because 2011 the baby boomers started to retire. So I think there's a real question out there for some statisticians to see how bad has the job growth been, and how much is this kind of just the demographics? Like I wrote a couple months ago, we used to say you needed 150,000 non-farm payroll growth every month just to keep pace. That's no longer the case with the baby boomers starting to retire. So what the Fed also had to do is they had to explain why they're not going to tighten interest rates even if the unemployment rate goes below that 6.5 target, which it looks like it will, and they had committed not to do anything out to 2015. So I think the numbers, as happened as we spoke about in 2013, the numbers changed, so the outlook would change. The economy is still, it's still this stubborn, slow growth. Every time we seem to be getting ahead with 3, positive months, there's this slow growth again. So I'd say don't panic. There's not going to be a tightening soon. Probably not going to be any tightening in 2014. The tapering, if growth continues to slow, is probably going to take the whole year rather get finished up, in the late summer, as thought earlier. So this has been Dan Collins, Editor-in-Chief of Futures Magazine for Traders Exclusive. Look at me on futuresmag.com and look out for our March Top Traders issue. Hope to talk to you soon.